Hi everyone, Crypto Vatsik here. Thanks for joining. If you like this video, please subscribe and like to the channel. I would really appreciate it, and nothing of what you're about to see is considered financial advice. As always, these are my opinions only. Let's get into it. Okay, today's video is going to be a quick update on Bitcoin and Ethereum and what we're seeing currently and what we could see in the near to mid future. Okay, so let's get started. First off, keeping it simple, okay? What are we seeing? We saw our macro low, higher low, higher low, higher low, higher low, higher low. Okay? It's very simple. Higher highs, higher highs, higher highs, higher highs. What does this mean? This is a bullish structure, okay? Keep it simple. Don't overcomplicate it. We are seeing a bullish structure making higher highs and higher lows, okay? So the trend for now is up, okay? Now, what initiated this? Okay? When we made this low, all right, we made this range here, okay? Right here. What did we do? Okay, so we made this range here. We were basically just ranging within it, and we had a break in market structure, okay? We had these two highs here, right there, okay? These two highs, 1 and 2, in this range, near the top of the range, and we broke that market structure, okay? We broke above it here. When we made this new high, it was resistance here. Okay, it was not another SFP. We broke above and then came back down and acted temporarily as support, did come back down to the mid-range here, but this was the key, right? So when we broke this structure right here, okay, that's where we break this downward bearish structure, okay, on the lower time frame here. So overall, on macro time frame, it's still a bearish trend, okay, but zooming in, we've got now this uptrend, which is basically a break in the temporary market structure, okay? And you could have said, when we made this low here, if you're looking to short, these are SFPs here, okay? So we had this SFP swing failure pattern here if you were looking to go short. So if you're expecting something like this, it had a failure here and then another swing failure here, okay? So if you had it basically inverted, you'd have the, one sec, inverted, okay? Essentially, which is our low. You could say made our high, okay? Try to swing failure pattern right here, swing failure pattern here, okay? And then came back down. That's the inverted, keep in mind, okay? So just giving you perspective there. Now, these are considered bullish SFPs, okay? And then we just saw basically something very similar up here. These are considered bearish SFPs, okay? So we're clearly trying to get through this resistance here. We broke the market structure here above it. Bearish SFP right here. Wicked a bunch of times trying to get through it, couldn't do it. Another bearish SFP here, could have been a good short, okay, temporary short. Now, it's critical to recognize we had this range down here, okay? So from this area here, from the top of this candle, over here that we made on June 15th, okay, down to the bottom, macro low. We had this range, okay, just clean it up a bit. So above, basically we've broken out of this range, okay? So before, what did we see? Well, we saw something very similar, okay? We had this previous range. Now, we had our high here, had our low, and then ranged within it, just below the median, broke above, swing failure pattern, broke down, okay? And what's different between this range that we saw previously and this range is now that we've broken that market structure. We've broken above the range, okay? And now the range high is acting as support, okay? So that's the main difference between these two different ranges. Now, when we're looking at coming above, this is going to be these are going to start to develop our areas of targets if you're looking to go long, okay? So what I'd be doing is I'd just essentially be drawing this out for areas of interest, okay? And we'll get into some other things, how to get targets in a second here, but this is what we're seeing, okay? So we see our current range here, essentially now is going to be acting as our support with our resistance up above in this range, okay? Between these two ranges, this area here is our void, okay? This is what you call inefficiency. These are inefficient candles. Basically, there's been no price action here within the recent past, okay, that has given us a reason to believe that there's going to be any significant resistance. Okay, the only point that I might consider having some resistance is the bottom of this wick here, right around 26,600. Okay, so could be a first target, which again I'll get into in a second here. Okay, but basically the majority of these 1, 2, 3, kind of 4, at least 3 candles is our inefficient area. Okay, so if we start to do something like this and consolidate, I would expect us to shoot basically right up to the bottom of this previous range low at around 28,000, just over 28,000. Okay.
Now, what I would like to see for this to happen basically is we've got this order block here. Okay, right? So with these swing failure patterns created this clear area of resistance right here. So basically this order block area of interest, I would like to see a clean break, and we might be seeing that right now at this point. This could have been break, zooming in, we're coming back down and retesting it right now as support, but I wouldn't be just entering along right now. I would still like to see a little bit more price action develop above this area, right? So if we can do something like this where it's clearly established this base as support now, which is previous resistance within this OB block, would be giving me the confidence to start to enter along for this play. Okay. So it's more like from this candle here. Let me just fix this a bit. Okay. Something like that. So basically zooming in, I'd be really wanting to dive into the lower time frame. And, if this area can hold here at the moment and we start to see something like this with one more low, that would be my level of confirmation, okay, and be trying to enter somewhere within this order block area. And if we don't get that and we come, something like this where we come back deeper into this green area, this zone here, okay, then I would expect that we'd probably get some sort of rejection and come back down and test the low and start to test these highs, and potentially even test this low again as well at some point down here, which is the previous range high. Okay, so this might look like a big drop in the grand scheme of things on hard time frame. It's really not that bad, but the question is if we're going to hold this area here in the short term. Okay, so with that said, it's good to be able to play both sides, okay, if we're going to go down or if we're going to go up. So now let's look at both scenarios and how I would approach it. So far we've established this base, okay, right? So we have this SFP and this minor SFP here. Okay, we came back down, we tested these lows here, this swing low. Okay, came back down, made a higher high, made our low here, deviation inside the previous range high, made a higher low here, came back up, and I would like to see somewhere around here be tested, right, if I'm going to go long. So somewhere in this area, excuse me, testing these wicks down here. And so, you could see something like this, right? And then something like that. Okay, so I'd be looking to enter around in that area. Now, if you're going to enter here, it's not as tight of a stop loss as I would like, right? So if you got in somewhere here on this, basically this dip here, you'd really want to set your stop loss. It's not the greatest area here. You'd want to set your stop loss below the previous support, right? So it's a bit more difficult within here to identify that. I mean, it's pretty choppy. Nothing's really stopping it for just coming down here, stopping you out, and then continuing up, right? So what I'd be really trying to look for is basically a retest of this previous range high, okay, and then I want to see something like this where you break a market structure. Okay, you make a low here, a higher low, and then a higher high. Okay, and then I would expect to see something like that afterwards. And in this case, you'd have a much nicer entry somewhere in here. You could wait for the low, wait for the higher low retest, okay, and then get the break market structure here. Much cleaner, tighter stop loss, and I'd basically just be putting your stop at this previous low right there, just below it, sort of thing. Okay, so you got a 1.5, 1.5% risk there, And then now for target, like I said, you'd be zooming out, higher time frame, okay? I'd be looking for basically these previous levels, okay? So you can take some fibs here, draw them out from this low to this high potentially, okay? Somewhere in that area there, either one of those, okay? So we'd be looking at, let's get rid of these here and just clean this up. So if you're looking at basically your take profits, you'd be looking at this level here. So basically the 161 percentile, which is just above this wick. It's still within this wick here, right? Just near the lows. So you'd basically say, okay, right around here is your sweet spot for possibly a take profit 1, right? So somewhere in there, okay? Probably tighten that up a bit. So then you could say, basically then you'd have your take profit at 1-to-1 extension here. So right around this previous range median. So let's see here. So if this is your take profit 2, let's see where the range was. From the range high to the low. Let's see here. Okay, right around that mid-range here. So you'd basically the previous range low you'd have, as your take profit 1, and then take profit 2 at 200 percentile, which is a 1-to-1 extension from this entire move here. Okay, so that's what I'd be looking for. And then, up to you to each their own sort of thing. If you'd leave a little bit left, kind of, a moon bag sort of thing, or you just be targeting the next fib, which is really essentially just coming from over here. These wicks, this liquidity here, right? You could basically say this is in line right there, right? So, and then I would expect definitely, so if you had this as your long, I'd be heavily taking off everything within at least this range here, because what I would expect thereafter. So if we did get this, got your entry, okay, and came up, and then you even get that final target, I would expect something like this again. Okay, bottoms take a long time to form. I think that these lows, this area is going to be tested again at some point. I don't think it's going to be straight up here. And you can just zoom out hard time frame and look at we'll look at a previous bottom, but something like this where you're going to see accumulation over time, right? So something like this to charge up for the next bull run. Okay, it's not just going to be straight up to all-time highs. You really want to see something like this come with a base and come damn near close to these lows here. Okay, maybe not exactly. If this is assuming this is our bottom. Okay, we could easily make a new low. Keep that in mind. But if we're assuming this is our low, this is the bottom, then we will expect that we would come close and retest probably more than once, probably multiple times retest before heading back up. Okay, so that's the long scenario. Okay, now short scenario, basically I'd want to see the break of this market structure, so this bullish swing failure pattern here. I'd want to see it break a market structure, come back down below it here, okay, and then a bearish retest here, and then I'd be targeting the mid-range, this level here, and then if we broke that, I'd be targeting the range low. Okay, so basically that's the short play in the short term if we were to break this low right here. So this low, if we were to break that and have a bearish retest, I'd be targeting the mid-range and putting my stop probably above these highs here. So let's just see one sec. So yeah, basically something like this, breaking market structure, bearish retest, target the mid-range and potentially these lows, right? And just like here, right? So same thing, you saw this swing failure pattern, came back down, bearish retest, down to the mid-range, okay? And you'd be targeting again your stop loss just above these highs, right? So kind of this area where you'd have these highs where you would have been stopped out, okay? You'd want to make sure that you leave ample room, but not the greatest R&R. If you're going down to the low of the lows from over here, then yeah, a little bit better for sure. But just my thoughts if you were looking to go short. Anyways, that's it for this video. Thanks for joining. Hopefully you found it helpful, and we'll see you on the next one. Thanks. Bye.